Is it possible to outsmart the majority in the stock market? Financial expert Mr. Ramalingam will share his insights with you now.
I'm just an explorer of investment market for the last 21 years. In the last 21 years, I could see only one way to outsmart the majority. That is what is that? What you see is a football ground, the goalkeeper, and so this goalkeeper is someone new. So the coach has given a very clear instruction, very simple instruction, saying when there is a shot, there is a possibility that ball can come to your left or come to your right, and the ball to come on your left, you got lesser probability, and when the ball to come on your right, also you have lesser probability, but the ball to come on your straight, right, you have higher probability. 65% of the time, the ball will come straight to you. It will not go left or right 65% of the times. So you focus on that 65%. Don't focus on the left, don't focus on the right. You simply stay where you are. You miss whatever is going, whatever when the ball comes on your left, you simply ignore and miss. When the ball comes on your right, ignore and miss, and pay attention only to the shots which are coming straight to you. You just save that, then 65% of the shots you will be able to save. So you will be an above average goalkeeper. This is the instruction given by coach to the player. But on the day of the match, there is a pressure on him. Everyone in the ground is watching him. And when the ball is coming towards him, if he's not making any movement, he's simply standing like a dumb and catching only if it comes to him straight away. He's going left or right, he is not making any movement, then he'll be looking like a dumb. Oh, this goalkeeper seems to be like not making any movement. He is not a good goalkeeper. People may think this is the kind of pressure he goes through, regardless of an expert advice given to him. Under pressure, under momentary pressure, he reacts to it instead of responding thoughtfully, mindfully, checking the facts. Or in other words, at this point, his system one thinking is dominant. He is under pressure. System one thinking is dominant. System two thinking is not dominant. Because of that, he is facing this pressure. So he is ignoring the simple advice given by the coach, which is boring, so he wants to do something exciting. He moves on the left or right and misses 65% of the simple shots which is coming to him. Right? This analogy is straight away applicable to our stock market. The line which is on the top is someone has invested in Sensex in 1991 and they are leaving it as such. Now 1 rupee invested has become 56 rupees today. Nothing done. 1 rupee invested in Sensex has become 56 rupees today. Actually nowadays it has actually gone up. And I prepared this slide, it was $56,000. It touched 60 and again it went down to 58 now. So one has become 60 over a period of time, right? If someone could have stayed here, they could have achieved this. The next line, if someone could have missed the best 10 days in the market because they want to time the market, they want to avoid a few loss-making days, they have tried and missed some best 10 days in the market, their 1 rupee has come down to reach only 21. Instead of reaching 56, it is reaching only 21. If they are missing best 20 days, then it is appreciated only to 10 rupees. If they are missing the top 40 days in a matter of last 40 years, right? From 90, 2000, 2010, 2020, okay, 31 years, in the last 31 years, if someone could have missed the best 30 days or missed 40 days, then their 1 rupee is becoming only 3 rupees. In the process of timing, if you miss few good days, we are not able to get good return. If someone is dumb, they are not doing any calculation, nothing. They are investing and they are reaping 56. They got 56x returns, which is huge for doing nothing. But like a goalkeeper under pressure, we think doing nothing is dumb and act. Anyone who acts like a dumb in the short run will become smart in the long run. This is very simple, logical, right? So I told you this in our iPhone and first salary example itself, right? Acting dumb in the short run, you will become smart in the long run. Similarly, don't do anything smarter in the market to do something. The topic is you told, there is one way to outsmart the majority. I'll come to that, right? So as of now, be a dumb. Don't try to oversmart others by moving in and moving out, which is practically not possible for anyone to do. Same example, I'm just depicting it with a different picture, right? A different chart. So simply stay invested. Don't apply any weightage to the outlook or any weightage to headlines. Ignore the noise. simply stay invested, 1 rupee will automatically become 50. If you do something and miss a few days, then there's a high probability you will get poor returns. You will lose significant gains by moving out and moving in of the market. Because people are moving in and moving out, they are losing an opportunity. Simply, they could have got 56 percentage, 56, 1 rupee could have become 56. But because people are losing an opportunity, they are losing money to the stock. That money is what transferred to someone who's a dump. The market is going up only by 10% rate, but someone who's a dump and staying invested is gaining 15% return. How? The underlying business is giving only 10% return, but whereas the dump investor who simply stayed in the market has got 15% return. How? Because the 5% additional return is the loss made by the smart investors who want to time the market. They are losing money in the stock market. That is translating as a gain to dump investors who are staying. In fact, they are actually the real smart investors who got conviction to stay regardless of the volatility.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.